All right, welcome back to JYR Trades. I am your host Jesse, and I tell you, it's been a while since I've done a video. It's been an interesting journey here at JYR Trades. I gotta tell you, first of all, I've been extremely busy doing different things. It seems like life is definitely ramping up, right, from time to time, and you get busy with different projects. But I will say this: the trading has continued. Okay, the journey has continued to evolve, and I say this with a lot of confidence. I am not the same trader that I was on the last video that I made about a month ago here on my YouTube channel. Summer is out, summer has started, school is out, okay, and now hopefully I have a little bit more time to dedicate myself to journaling once again, putting these examples here for you guys to learn along with me. And I will say this: today I'm going to show you guys why I'm not the same trader I was again just a few months ago, especially a year ago. Okay, as always guys, everything that I share on my channel here on JYR Trades is for educational purposes. Nothing is financial advice, but I will say this: if you do want to learn how to think like the institutions think, how to trade auction theory, market structure, then you're in the right place. And I hope you'll join me on my journey. You'll hit that subscribe button and that you will learn along the way. Before I continue any further, I do want to give a shout out to two specific people on this video. One, to a colleague of mine, Mr. Villanueva. I hope you're watching, sir. Thank you for those words, those messages back and forth. We are learning on this journey together, sir. And I want to say that it truly has been amazing to see our growth, right? The way we describe the market, the way we are beginning to understand it, truly is an amazing thing, right? And the other shout out I want to give is to one of my students right now, okay? Jacob, I know you're young. I know you just started looking at this, but this I do promise you, if you focus on this, it's going to change your life by the time you eventually graduate high school. Alright, with that said, let's go ahead and get started, guys. So, first things first, how did the market open? Okay, well, let me go back to that, because like I said, normally I would just focus on, are we opening inside outside value? This is London right before market's gonna open. I'm gonna take some of these indicators that I have again built over time, and by the way, those have helped quite a bit. But anyways, there's again the indicators, they help, but it's the time that you're spending behind the charts, looking, learning, dissecting, analyzing, that truly is going to help you. All right, so first things first, you know, in the past I used to look at where are we opening. Yes, I still look at that, but there's been a transition since the last time I spoke with you guys. Now I consider myself, I've transitioned from being a reactional trader to an auction trader. Truly, I'm beginning to understand that the market is an auction. It's a self-evolving market. We know that the market is not rigid. It does not stay in one shape. It's really never the same every single day. It's going to give us a different disguise, and it truly is up to us to be able to dissect it in the moment. Okay, when I first started the journey, I would start to see, eventually when the day would pass by, I would start to see, you know, when the market would close, I would start to see what transpired, right? You start to get an understanding. Now I'm beginning to understand what is going to happen, what could possibly happen, but I'm beginning to understand one thing: patience is key, but you really have to think in probabilities, and the market has to confirm the move that you're trying to do, that's trying to show you. Okay, all right. So in the past, guys, I would usually look at, okay, where is market opening, right? And if you guys have been with me on this journey, you know that my two white lines here, I got this top white line, and this white line represents, okay, New York value. All right, and if we open inside New York value, we're gonna have some type of rotation. If we open outside of value, we may have either an expansion or a repair. It just really depends. Now in the past, I used to also look at how how many structures were above us, how many POCs were above us, point of controls, how many mids. And I used to have this understanding that, you know, if all of our structures are above us, there's a good chance we're going to short. And of course, when you start learning this process, you start to realize that the market's not always going to give it to you that easy. You have to be patient, and you really have to look at the bigger picture. And so since my last video, I will say this, that I've discovered new ways to look at the market. Okay, I no longer look at just the structures. I look at the imbalances, I look at the traps, I look at the probabilities of where our auction center is going to be. Not just our post-migration zero. Now where's our auction center? Where is price going to negotiate from that point on to make the move? To decide, do I want to actually break out of the box, break out of value, okay? Or do I want to repair into this specific value, and so on, okay? And so I've taken on a different approach now when I look at the market, okay? Before I just used to look at, again, the structures where they were, and I would make my decision based on that. Now I look at the imbalances, because the market is going to give us imbalances and give us clues that are going to give us a better understanding of what to expect. Okay, 3 months ago today, on this specific day, on June the 1st, I would have taken a short. Seeing this particular setup there, I would have taken a short. Because why? I would have said all the structures are above us. Okay, looks like London wants to flush. Okay, and I realized that there is a bigger picture beyond that. Did I take a short today? No, absolutely not. I took a long. So I'm going to go ahead and try to explain to you guys in a short-term version what happened, what has changed. Alright, so to know what is going to transpire, you actually have to go back the day before. Alright, and so one of the things that I do is, you know, once the day has ended, this is Friday's day, okay? Today's Monday, by the way. Alright, Friday has ended, I will mark out my levels as I always do. Alright, I look at, you know, I look at what's the previous day high at the end of the day. Okay, this is my blue teal line, the previous day low. So right here we have this particular part of New York created the high, this part of Asia created the low of the day. I'll get my fib, measure it, it gives me a middle. This creates my 50% or my 50 on my fib, and that creates my previous day mid. Now at that point, what I will do is I will also go ahead and get my fixed range volume profile tool, which is this one here, and I will measure from the beginning of that specific range, that day, that session, all the way to the end. This will give me the fixed range volume profile. It gives me the value area high, as you guys know. This is the value area high. Gives me the point of control where the most trading took place, the value. Okay, and then this gives me the value area low. Now, what I will look at right there and then is I will look at where's my point of control and where is the mid. And when you look at this particular setup here, two things that stand out to me. One, we have the point of control leading the mid north. So that's kind of telling us, hey, the next day there's a possibility that we want to go north. Okay, so I go ahead and measure this specific imbalance, and I'm like, okay, we got roughly about 30 points. Okay, nothing major, nothing extreme, but it's definitely not just anything. Okay, now I'll also take a look at the geometry, the angle of the volume nodes within the volume profile. Now, when you see that this specific shape is kind of like almost like a V shape, okay, almost like a V shape. All right, it's not a P shape where you're having most of the volume up here and then it's kind of dying off. No, this is kind of like a right in the center, we're having like a like a V shape, I guess a sideways V, okay? All right, or like you can say it's kind of like a triangle, right? You that is telling me one thing. We are looking at a rotational type of day the next day, possibly. However, what I'm also looking at is how does the value area high look and the value area low. If you look at the value area low here, it has more of a staircase here, right? A little bit of a drop off at some point, but the value area high looks more definitely like a drop off, almost like a valley, and then it's got a little bit of a staircase. So when I see this here, yes, this looks like a rotational type of day, but if price decides that it's going to move in one specific direction, it looks like the north has more of an easier, I guess, chance. Because why? This is less of a fight. Okay, this right here is less of a fight, less resistance for price to go up. Okay, but remember, we are looking at a rotational based on this shape here. All right, now the second thing that I look at, all right, is once New York has closed, I say to myself, okay, now let's do our value area high for New York. Okay, let's go ahead and measure it. Okay, now I'm just gonna move this just a little bit further. So you see that this is the value area high and low of the 24-hour POC. All right. So at this point, I go ahead and get my New York session. I get my volume range profile tool, and once again, I measure from the beginning of New York all the way to the end. New York AM and New York PM, all of it. All right. And what I do right there, it gives me a value area high. In this case, the value area high was on the same spot as the 24-hour. The POC was also on the same spot as the 24-hour POC. However, the value area low was a little bit higher here. Okay, and you can see that here I did extend my New York value. I extended, for the next day, not the entire 24-hour. Okay, because when market is going to go outside of value or rotate within value, it uses the previous New York value. Okay, it doesn't use the entire 24 hours. However, you can put it there as a way to say, sometimes price will, like today, may go outside of well, not like today, but yeah, today actually went outside of value, but this is last Friday. It may go outside of New York value, but perhaps maybe it stayed within the 24-hour. But anyways, so I look at that here. All right, I have my POC, my value area high, my value area low. Okay, so I have those set, and then at that point, ladies and gentlemen, what I do here is, again, so I do have the level, but you know what, let me draw it right now so everybody can see what I'm talking about here, because I do take it off doing the, when I'm looking at going back and I'm looking at things, right? So one thing you'll notice is, again, the shape very similar to our 24-hour. Centered, just almost like a V shape, meeting into the POC. The POC slightly closer to the value area high, but still centered. But the value area high, again, more of a drop off, letting us know there's less resistance if price wants to go up. Here, more of a staircase. Okay, you see it here. Here, definitely a drop more. Okay, so it's giving me the same thing. However, I also look at the mid. I measure from top to bottom for the entire session, and I put this green line here, and you'll notice once again the POC is leading this particular mid, but it's only leading it by about 3 points. So it's a very small imbalance, actually almost neutral like. So right now we're still showing that the 24-hour POC is actually leading again by 30 points. So that's the end of the day for that specific day. I have my measurements. I don't have everything yet because I gotta let Asia and London do its thing. Okay, and so now once Asia is happening, okay, the middle of the night, right before I go to bed, I look at the levels and I start measuring my Asia. I put my Asia POC, I put my Asia fixed range volume profile, excuse me. I see where the POC is at, okay, and say that, you know, the night before it gets to about this point, okay, I'm looking at it. I do my fib once again, you know, and I basically once again just kind of measure to see where is the mid, right? And you see right here I got the 50 and I have the blue line here right with this particular POC. This is London's POC. But anyways, so here you'll see that on this particular Asia session, what happened? We have the POC leading the mid, and I'll take a look at it and be like, man, that's a bigger imbalance at that point. 80 points is no joke. So that's telling me that price wants to pull up for possibly for New York when New York opens. And so I take those notes. You know, I'll also leave it overnight. Remember the fixed range volume profile, you can have it set up to where it's extended throughout the night. I don't have it extended. I will go ahead and now let me click on it here. You see this right here, this option tells you extend it to the right. I don't extend it to the right because then it's going to extend throughout London and it's going to measure London, and I don't want to do that. I want to leave each imbalance separate from each session. Asia from London, London from Asia separately, New York, and so on. Now I do it for the 24-hour, obviously, you know, for the next day. But here I want to check it. And so when I wake up in the mornings, I'll look at, first of all, say that I leave, you know, I go to sleep, it's markets around here. I will go ahead and extend it all the way to where it finished. And the first thing I look at, did it migrate? Did value migrate lower, or did it stay in the same spot, or did it go higher, right? And so I'll look at the mid. Did the session, you know, did it increase in size? And I'll adjust the mid. Okay, for this particular night, it pretty much stayed in the same spot, you know, because right here this was the high point. I still hadn't gone to bed yet, I think, that night, and it's pretty much stayed here. Okay, so we have three POCs leading the mids to the north, Asia being the biggest imbalance. Okay, now let me delete this here. At that point, I look at what is London doing, and as you can see, London decided that it wanted to do a repair, right? It started coming down, value started down. However, the POC stays around here. When I woke up this morning around 6 o'clock this morning, which was around here, the POC was in this spot here. But then you will see that between 6 and 7:30, London did a flush, and I saw that. I mean, at that point we had the mid above here, and we had the POC leading south. So we had three imbalances against one at that point. And I realized, like, well, okay, that's telling us that we have three against one. The imbalance for Asia is the strongest, showing an 80-point imbalance. This one was about 30 points at the time, heading south. Okay, and once price started flushing, I realized, I mean, this started getting, obviously this created a bigger range for London. Overnight range started, you know, making it you know, bigger. I think when I woke up we were like at 234 points, you know, the entire session here, but it stretched, I think, like another 40 points or maybe more, actually. Yeah, it was more than 40 points. Anyway, so when it flushed like this, what did it do? It actually created, it moved our mid from like up here to down here. So when New York was about to open, I realized that now we had the London POC leading the London mid. Okay, and so I realized at this point that this is the other thing that's stuck out to me. Okay, remember when price decides to make a flush, and if the POC doesn't migrate, it doesn't move. Okay, with it, uh, price is telling this, the market's telling us, hey, you may have flushed, but value is still up here. So guess what? It's not really deciding we want to accept lower lows. So that basically gave me confidence that the price wanted to go up. Okay, when New York was going to open. However, there was one slight thing that changed here. Okay, as I've been on this journey, I've learned that usually the market has traps. Okay, and the traps tend to be the mids. All right, they tend to be the mids, and in this case we had London right here, we had Asia right here, and market open. And I'm thinking to myself, wait a minute, the imbalances say we're gonna go up. Now I need you to understand, Asia and London are what we call micro imbalances. Okay, New York is an intermediate macro, bigger, and then we have the 24-hour is larger. It's a macro. However, just because they're macros, it doesn't mean that they have automatically more weight. The market may look at the micro and say, hey, you created a larger imbalance, unfinished business up there, we have to go after it. Okay, but first we're gonna trap buyers and sellers. Okay, and I'm looking at the structure. Remember, I told you that 3 months ago I would have looked at this opening right here and I would have said, wait a minute, all the structures are above us, this thing's gonna flush. That's what I would have said. Okay, but market created a London low here, recent, took out liquidity, and I realized, well, the first trap is here, the London mid. Okay, I looked at it, we were opening outside of value, so I'm thinking, okay, if it decides to go to the downside, truly it would have to like reject possibly around here and then go down. But remember what I specifically have been learning, the imbalances are going to tell the story. The imbalances are going to tell the story, the bigger picture. Every single POC was leading its own mid. Asia created the biggest one of all. And remember what I said, I've learned to discover that price, when it opens, it's going to go to a trap. Now, it's not always going to go straight to the trap in a straight line. Market will not always do that. But remember what I said also, that Friday, when Friday ended, I looked at that shape. I said, war is going to be rotational, but the value area high is going to tell us that we have more of a chance for it to go up. Right? That if it wants to break out, it's going to be to the north side because of the way the valley, it had more of a drop off on the north side. All right, New York POC leading its mid by just a little bit, 3 points, kind of neutral. But then Asia created the bigger imbalance. North 80 points, that's a huge one there. And then finally, London with that flush created that POC again, leading it by again about 30 points. Okay, not a whole lot, 22 points, 23. So I'm looking at it and I'm like, it wants to go up, but if it wants to go up, it's gotta trap the buyers, it's gotta trap the sellers. So remember what I said, it's gonna rotate first, right? And then it's going to make a move to the top side. And if it's gonna trap, it's gonna still trap from the top side, not from the downside. So when price opened up and I saw that, as you guys know, this is one of my programs, I have a cloud zero here, decides to give me a wick here. Let me talk here. And I've been learning about higher highs, higher lows. When it fails to create a lower low, higher high, it's giving us a signal for certain movements, right? So price opens here, we get double wick spikes, and here we get a double wick once again, and this fails to create a lower low. When I see that here, and the next move creates a move to the top side with a specific you know, displacement candle, no wick to the bottom side, I decided to go in. And I'm gonna be honest, I was a little bit nervous here because I'm like, the traps are above us. But I decided to take that long because again, the trap was above us. Alright? However, we're not trapping from the top side. Right? And I thought to myself, well, what if it decides to like hit the trap and then come down? So I went in here, gave me a little bit of drawdown on this specific candle, but after that it decided to push, and literally I hit my target. Now, what did I target here, by the way, guys? I targeted not the trap. I targeted before the trap, the next safest thing, and that was the value area high for New York. Why? Because what if it decides to rotate, hit that valley, and starts coming back down? Thought to myself. Well, so it goes through the valley, hits the target of the trap. But remember, this is a trap, but it's still not acting as a trap in my opinion. Okay, it's the resistance in a way. Hits it, comes back down. Okay, and post migration happened shortly around here, I think it was. That's the other thing. Migration only happened at 1 point above. The cloud below us kind of signaled that we were going to be rotating, right? So it goes through this motion here, a little bit of a compression, hits the mid once again, and actually the VWAP right here, you can see the VWAP right here, and then decides to do a reversion here, right? Boom, starts coming back down. What does price do here? Okay, it decides to go through the cloud here, and nearly comes back to the specific London low. It doesn't tag it, and it starts going back up. Okay, now this is where it got interesting. Now I had a liquidity box for my program here. Let me go ahead and put this here. You guys know that I have a liquidity box. Once we have post migration, I get 60 points this way, 60 points that way. That creates this liquidity box here. In this case, it was right here, the edge of it, this edge here. The other program that I do have, that I recently worked on, that I have not, I don't think I've measured, I mentioned it to you guys. I created what we call an auction center. So this is basically going to tell me where is price going to negotiate from. Make the decision at this point. And right here it was telling me that the 24-hour POC, which is this one here, was going to be the decision point. Now I'm looking at this, but honestly, where am I looking for a safe entry? Once it leaves the liquidity box, and once it left, you'll see right here it comes back, right above, it comes up, exits the liquidity box, comes back to the Asia mid. This is a trap here, and booyah, goes up to the previous state, almost to this POC, comes back to the second trap, the London mid, and then from there it expands. And you can see the fib is right here for the session, and I mean, look at this, nearly goes to the 2. But it did hit the traps from the top side. This one was quick, goes over it, comes back, rejects, goes up. This one nearly hits the POC. It does hit the previous day high, right? And it starts to come back down. And this one here, this was the second trap. That's why I have these two arrows here. So the process has been different, guys. It has been different. Learning not just the market structure, the context, the auction itself. Understanding that the auction, it's going to show you the imbalances And there's going to be days that the imbalances are going to be conflicting, and you have to look at which imbalance has the biggest imbalance, the points, but also which one is the most freshest, right? And sometimes we're going to have multi traps, one trap to the north, one trap to the south, and then it's going to make a move eventually, right? What has changed since the last time, besides the understanding the actual auction itself, is the patience. Now, there's going to be times where this specific move that I made today, I would have waited for. But again, the imbalances were telling me that we were going to go north. I saw that we were beginning to build outside of the cloud. Okay. And so I targeted again the mid right here. The auction center was right here, so it was in the way towards the actual first trap. Okay, this was enough for me right here to not only to increase my capital, but also to protect my psychology, right? But more than anything, you know, I literally, when I saw this, I think I logged off the computer right around here. It was getting close to that value area, and I said to myself, okay, if it breaks, this is what it's going to do. And sure enough, it got the trap, first one, came back down to the second one, and from there it took off. I mean, just this move alone, let me measure here. From here to the one, I mean, you're looking at 90 points to this POC, the final structure, right? But although, to be honest with you, I think you could have been safe targeting the London high to complete the auction. Okay, 136 points to the 1.75, 203 points, and where it reached 235 points. Of course, we know not always it's gonna go to the 2, but today it almost did. But anyway, so I will leave you guys with this right here. Continue on this journey if you're truly serious about this. Let the market show you. You're gonna go through a process at times where you're gonna be overloaded with information, and you're going to maybe even doubt yourself at times. And I went through that period for a little while, but I feel that now that I'm beginning to understand the auction, that it has a life of itself, a life of its own, and it has its own personalities, and every single day it's a different disguise, a different personality. You have to be patient, you have to know what you're looking for, but you have to let it confirm. And if you're just patient just right enough, eventually you're gonna start to get those moves, you're gonna start to catch more and more, and you're gonna get better over time. Protect that psychology, protect your capital, build the edge. Okay, just because we're practicing every day doesn't mean that we might be practicing the right stuff. Okay, and whether it's paper trade, demo, or real, you really need to take it serious. Okay, and with that said, I'm gonna try to continue to making these videos. I know this one took a little while because I kind of explained the process there, but I'll try to make some more videos throughout the next several weeks, at least a couple videos per week. Okay, so that way we're not I'm not forgetting to journal. Remember, I started this process for one specific reason, so that I could journal my own journey, to journal my trades, go back, look at the videos and all that. And I can tell you it does help. Why? Because you see the progress. You see like what you were looking back then to what you're looking now, how much the evolution has come about. Big difference. So I wish you the best on your journey. I hope that you'll continue to join me on mine and learn with me along the process, and that hopefully you pick up something from this channel that will help you. As always, everything that I talk about here, it's not financial advice, it's for educational purposes. And until next time, from JYR Trades, hope you guys have a good night.